Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Happy Friday, everybody. It is a beautiful day here in sunny Seattle, Washington, and we got Caleb Johnson with us to talk a little bit about residential real estate, specifically multifamily. We love our multifamily guys. So, Caleb, thank you very much for hopping on the show.
Gabe, thank you for having me.
Absolutely. I told you right before we got on here, we like to start with stories. So, take us to the beginning of your story. How'd you get started in real estate?
Yeah. So, two things got me started in real estate. One was when I learned that 90% of millionaires had gotten their millions through real estate. I knew I had to learn more because if I wanted to have that success and really just the freedom to do what I want, when I want, with who I want, then real estate was probably my best bet. Now, the second thing that really motivated me to even start an entrepreneurship was because of my mom. She, long story short, had surgery. And so she was around that retirement age and was going to be out of work for 3 months. And at the end of 3 months, she was going to go back to work, but she hadn't healed properly. So she was stuck with a tough decision: go back to work and make more money, or stay home, rest and recover, which was probably best for her, but prolong retiring by 3 years, 3 to 5 years, because she was saving for retirement. So she made the tough call to go back to work. And honestly, Gabe, I would see her come home just in tears because she was in so much stress and so much physical pain and agony. And that really broke my heart. And I wanted to help her retire early. And at the same time, I didn't want to go through that myself. So having a job kind of dictate and put me in that position where I'm not prepared to retire. And I'm not saying jobs are a bad thing. I definitely think we need jobs and occupations, and that's great. And especially if that's what you want to do with your life, then praise God. But for me, I wanted more control over my future, and that's what got me started on real estate.
Nice, man. Yeah, that's why I love hearing people getting into real estate for the financial freedom aspect of it, because, so many times in life, things can just kind of come out of the woodwork. And if you're forced to make a decision that is not in the best interest of, your health, your family's health, simply because of finances, that is, I never like to hear that. We're just going through, we just had our first kid, and, generally, thank you. But generally people get, up to 3 months maternity leave. And I feel like that is not enough. And I'm not comparing it to your story, but just, having to make, if somebody had to make the decision, do they stay with their child or do they go back to work just because of finances is always hard. So it's great to hear that, you went and you saw that, you took that story from your mom and you used it as motivation to create a financial stable future for you guys through real estate. And I've heard of that 90% of millionaires. I think it's in history, right? Were created through real estate.
Yeah. Something like that.
That's been thrown around so many times. I don't know who created that number or how it was made, but it is pretty crazy to think about. Maybe if you go in history, it makes sense. I just feel like nowadays,
there's so many young entrepreneurs, especially in like marketing, media. So I don't know. That's a stat, and it motivated me, man. So I'm happy I'm here.
Yeah, for sure. Well, right on. Let's talk about what you guys do. So you made that decision. You saw your mom go through that experience, and you wanted to get into real estate. What'd you buy first, and what led you from there to multifamily?
My first deal was a fourplex that I house hacked. And just to define quickly what that means is I bought a fourplex. I lived in one unit, rented out the other 3. But because I was living on site, a lender was willing to give me very favorable debt terms. I only needed about 3.5% for the down payment. So like $12,000. And once that property was stabilized, it was making me about $1,200 a month. and then we sold it, and we really caught that appreciation wave. So that was a great first investment.
Oh yeah.
Now,
What year was that, by the way?
that
you buy it?
was 2018,
Oh, nice. Yeah.
around then. Yeah.
Yep.
And especially in the Phoenix market, I mean, it was such a blessing.
Hockey stick. Yeah.
Yeah. And then did that again with a duplex, did a flip in there. And so for about 3 years, I focused on that residential sub 4 unit range. And I always thought that I would stay there for a few years, more years, maybe 5 to 10. And then I would scale into apartments eventually. But around that 3 year mark, really learned the opportunity and the scale potential with apartments. And that's when I jumped in. And today we've done 6 deals, 2 JVs, 4 syndications, and we focus on 75 plus units.
Nice. And is this all in the Phoenix market, or have you guys branched out to different markets?
Yeah, we looked in Phoenix, and I'm not buying in Phoenix currently, at least probably for the next 6 months. We are aggressive in Tucson, which is the secondary market in Arizona.
That's north, right?
That's south.
Oh, it's south. Oh, right,
south.
right. Flagstaff is north.
Right, exactly.
There you go.
And we own in New Mexico. I'm not buying there anymore. And we are aggressively pursuing deals in Texas, Oklahoma, Alabama, and Arkansas.
Nice. Okay. So let's run through, because that's a wide array of markets. And you mentioned that you were looking in New Mexico. You're not anymore. Let's talk a little bit about those markets, because choosing a market is one of the first decisions you have to make, and it's a big one. Because if you choose the wrong one, you might be in for a hard time.
Yeah.
So why did you initially choose New Mexico, and then why did you get out of New Mexico?
Yeah. And like you said, Gabe, it is such an important thing. The market is one of the most fundamental, important things, right up there with picking the sponsor. And so New Mexico, we were looking there because we had relationships, and one of my partners already owned there. He owned 60 units, so it was nice, kind of economies of scale. And now that I own 3 properties there, we're really realizing that the city is very challenging. It's a blue state, and so you have
Really, I didn't know that. I
these.
thought it was red. That's interesting.
Yeah, yeah. And so we're having a lot of challenges just with the city evicting people, just having that process dragged out longer than it would otherwise in a red state. So, and with it being New Mexico, there are some great property managers there, and we work with one of them. Now, I will say the pool for property managers is very low. So you have to have the right kind of property that's large enough to support a good manager being willing to go there, because it's not like a Phoenix or a DFW where you have dozens of really great property managers that you can pick from.
Yeah. Yep. That makes sense. So it sounds like it was a lot of, politics were a big factor in that. Was the economy didn't matter, or at least didn't have that much of an impact. I don't know much about New Mexico. I'm assuming it's doing okay.
Yeah. Yeah. Great growth. Albuquerque and Las Cruces. Las Cruces is a secondary market to Albuquerque, which is a primary market. And they have great job diversity, job growth. And so the metrics are there. Just on the city front, it's pretty challenging.
And I'm assuming we can use that same logic to the new markets you listed, because you said you left New Mexico because it was a blue state, politics were hard, and then you went to Oklahoma, Texas, and Alabama, all red states. I'm assuming, well, they also have great growth, but I'm assuming that's one of the reasons why you chose those.
Yeah. Yeah. And looking at, we look at the Bureau of Labor Statistics and the forecasted job growth for the next 10 years. And there's a great book written by Dave, God, why can't I think of his last name? But it's called Emerging Real Estate Markets, David Lindahl.
Okay. And
he talks about how to pick a really great market. So I use that book like the Bible in picking a market that we picked. And Alabama's on top of all of those indicators is a union-free state. So a lot of big corporations. Yeah, a lot of big corporations are moving their headquarters there. And so that's why they're seeing all this really solid job growth. And then everyone knows Texas and Oklahoma, red state, very landlord friendly, and it's a cash flow market. So that means you can buy something for around $50,000-$60,000 a door, and rents are going to be $900. So it beats the 1% rule.
Yeah. Awesome. So Mississippi, Arkansas, Louisiana, I mean, I know that's part of the Sun Belt. People always like the Sun Belt. They like to invest in the Sun Belt. Those are also red states, but it didn't hit your criteria. What was missing out of those?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
You know, I have looked at Missouri, and I'm a Red Sea Capital is just me. And then I partner with strategic investors or partners for different deals in different markets. And so I don't want to spread myself too thin. I'm of the ilk of that. I'd like to know every broker and a couple markets and have some really good deal flow, build out a portfolio in that market compared to having one deal in 6 different states.
Yeah, that makes sense. All right, so let's talk a little bit about how you structure your deals. You mentioned Red Sea Capital, it's just you. So you go out there and it sounds like you've done both syndications and JVs. What is it that you bring to these deals? What is it that you bring to the partnerships? And then how do you find your partners? How does it all work?
Yeah, that's a great question, Gabe. So they're syndications. So what I bring to the deal is finding the deal. When I started 3 years ago, I started with broker relations. Actually, capital raising is what I started with, and that didn't go as well as I had thought back then.
It's harder than people say, right?
It is, man. It is.
Although I will say, after I made this podcast, it became a lot easier. If anybody is interested in raising capital and that's something that you want to, the value add that you want to do, I highly suggest creating some kind of informational platform that kind of puts you out there as an authority, because it really does help when you're having conversations with potential capital partners, just to show something that, you're having these conversations with other investors. They'll see it. They'll be like, okay, he knows what he's talking about.
Absolutely.
But I jumped into your conversation. Keep going.
Mm-hmm. Yeah. So I focus on broker relations and I'll find the deal. So I've been developing relationships with these guys for 2.5 years and I've done deals with some of them before. So that's what I bring to the table. And now, since I have the podcast and have more of a brand, capital raising is another focus of mine. And so we're also working on the sponsorship piece of that, where we can sponsor our own deals, because generally how our deals are structured, you need a key principal or a KP, and they're the ones that have the net worth and the liquidity to qualify for these loans. Mm-hmm. And so real quick, if you don't know, like you're asking, why is that important? Whenever you're getting one of these loans, let's say it's a $10 million loan, you need someone on your team that's signing on the note that has the net worth equal to or greater than the amount of that loan. So they need to be worth $10 million and they need liquidity of 10% of that loan. So they need $1 million cash, liquid, stocks, something that's liquid. And so we're working on that ourselves, just working on the the net worth piece. So we'll sign on every note that we can just to develop that experience. So that's how we structure our deals, and that's what I bring.
And you guys do bank financing?
We do. I mean, Freddie agency. We worked with credit unions in the past. It's pretty deal specific, and we do want to get the best rate that we can for each deal.
Yeah. We've been we do self-storage, mobile home RV parks, and everything in the past 6 months that I've underwritten just did not make sense with the interest rates. And so we've been going hard on seller financing. I've closed a bunch of seller financing deals, but recently I haven't been able to convince sellers to give me a seller financed structure with an interest rate that's lower than the market. And I'm just like, the reason I'm pushing seller financing is the market rates are too high. It doesn't make sense with your purchase price, but the message is not landing. So maybe one of these days.
Get there once you find the right motivated seller.
Yeah, exactly. Right on. So you guys are in those markets and you're focusing on 75 plus multifamily. Let's talk management. How do you manage it? Sounds like you guys partner with third-party property management companies.
That's exactly right. So, and I have before made the mistake of, it's not really necessarily a mistake, but focusing on, let's say 10 to that 70 unit mark is, from my experience, very challenging to find quality property management that is really good in that size range. Because you'll either have guys that focus on, we're talking residential, right? So you'll have guys that are really good at single family, small multifamily, under 10 units, and that's their bread and butter as managers, and they're great. Now, there's also guys that they only focus on 100, 150 units, and that's just their bread and butter, and that's all they do. So if I have a 60 unit deal, the 100 unit guy, he might take it on, but our property might actually suffer because he's used to this 100 unit thing, and it's completely different. There's not on-site management, so it's a completely different ballgame. And then at the same time, for that smaller apartment manager that does single family, they'll say, yeah, I'll take on a 60 unit apartment. It's 60 units under one roof. That's going to be way easier than 60 single family homes. And then they get into it and it's a completely different beast. So finding that good property manager for that deal size is really key, Gabe. And so that's why I focus on 75 plus units, is because 75 units is pretty close to that 100 unit mark. So you can still usually have an on-site office, and it runs more like a business closer to that 100 unit mark.
Yeah. That's why I always recommend people, when you first get started, get your education, partner with people, learn how to do the business, but don't dawdle in the lower unit counts for too long. Try to get to the higher unit counts because they're safer because you have more cash flow. And then it's also easier to manage. People don't really think about this, but when you have somebody on site with the bigger facilities, self-storage, multifamily, whatever, once you get to the point where you can have an on-site staff, it makes the management of the property a lot easier. And so, there's a ton of reasons why, and plus you're making more money. Obviously that's a good reason, but bigger is better. And definitely get started. You can start lower, but as fast as you can get to the higher units.
Yeah. And that's exactly what I did too. Started with, my first apartment was 16 units and then scaled 20, a 20, a 30, a 30. And so that's why we're focusing on larger deals. It's exactly what you said.
Yep, exactly. All right, man. I looked at the clock. It looks like we have run down the timer. So it is time to jump into the quick question round. Are you ready?
I'm ready.
Let's do it. Starts with books or any form of education. I need 2 recommendations, one for general life wisdom and then one for real estate or business specific.
Let's just go with the David Lindahl book, Emerging Real Estate Markets on the business front. And, I would say on the personal side, I would say either the book of Proverbs or the book of James in the Bible. Those have some great, wisdom. The Proverbs is the book of wisdom. So that's a big one and has really shaped my life just in being a better business person. So those are my 2 recommendations.
Nice. I love it. My favorite book is Meditations by Marcus Aurelius. And I think it's pretty similar to Proverbs. It's just little aphorisms that kind of get you going every morning. So
yeah, cool.
Makes a lot of sense. All right, next question is for your younger self. So let's go back to Caleb, who just saw his mom, go through that experience, had that motivation, like I need to get things going. Go back to him, look him in the eye, give him one piece of advice moving forward.
Man, I actually just shared the same piece of advice on a podcast yesterday. And that is, I'm somewhat of an isolationist, meaning I can isolate myself from others very quickly and really just cut them out of my life. Right. If someone does something that doesn't make sense to me, whatever the reason is, I can just cut them out of my life and not think twice. And that can be good. But in my instance, it's bad because the seed of that is because of my ego. And honestly, Gabe, it's that I can think that I'm better than some people. I can think that I'm better than people sometimes. And that's not the case at all, because I can learn something from anybody all the time. And I don't remember who said it, but they said, every man is my superior in some way. So it might not be apartments, but I can learn something from everybody. And that's what I would tell my younger self, because I would have saved a lot of hardship, saved probably a lot of relationships if I had done that.
Yeah, the ego is a bitch for sure. It's a hard one to tame. And I think that quote, I want to say it was like either Benjamin Franklin or I've heard it before, and I'm probably going to be wrong. I think it was like Benjamin Franklin or Abraham Lincoln, but good quote and good advice for your younger self. Let's move on to the next question. And this is about, well, the US. It's a big place, a lot of opportunity. Give me the single metro, we're talking about cities, that you are most excited about investing in today.
Man, I would say Huntsville, North Alabama. That there is a lot of growth over there. And again, Union Free State. So if you buy something there, buy at a right price, but I think you'll do well.
Nice. Yeah, I've heard good things about Huntsville. My sister actually wanted to move there. And I was like, dang, man, Mississippi's so far away. All right, next question is about finding deals. It all starts with the lead. So what is your favorite way to find good deals?
The way I started is still my favorite way. And going to LoopNet and Crexi, I wrote down every broker's contact information on there. And it's not that I was looking for deals on LoopNet and Crexi. I have heard that being an option. And I've also heard that LoopNet is where good deals go to die. But for me, it was a great resource and tool to find brokers that were doing deals in that market. So I wrote down all their information, called them all up, told them my buy box, and that's how I closed my first deal. That's how I've built relationships with brokers I've done deals with today. So that is how I would recommend starting finding deals.
There you go. Brokers, gotta love it. I have done a deal off of LoopNet, and it turned out to be a decent deal. So people throw so much shade to on market deals, but some of them turned out to be okay. So
yeah.
All right, next question is about mentors. None of us are islands. We all stand on the shoulders of giants. So who is one mentor who has contributed significantly to your career today?
I'm going to go back to my first one, Gilbert Moreno here in Phoenix, Arizona, one of the top real estate agents here in Phoenix. And he owned a couple rentals, and he was probably 12 to 18 months ahead of me when I was first starting off. And he was very influential and giving me some contacts with contractors, lenders when I was first starting off.
All right, there you go. Okay, next one is about your strengths. We all are given gifts that we uniquely provide this world. So what is your Superman strength?
Man, these are some good questions, brother. I would say probably listening, and that kind of ties into emotional IQ. 30 seconds to do with that is that in high school, I was very antisocial. I would probably walk a half a mile out of my way just to avoid as many people as I could, because I had a very low self-confidence. And now God's actually used that in my life as a way that I can connect. And I really have a heart for listening to people and understanding how to communicate with people. So I'd say those two things are some of my superpowers.
There you go. Yeah, I mean, the hardest times in our life, they definitely create strengths that we don't necessarily know are being created in the time that you're going through that moment. And, you know, being able to listen to somebody, understanding what hard times feel like, and really connecting with people is definitely a strength. So love that. Next question is about deals gone bad. Not every single deal is bright and roses. Some of them, you know, some of them go sideways before they turn back up. So what was your biggest lesson learned in a deal that went sour?
So we were working on, we had an accepted LOI on 160 units in Oklahoma. That was around $10 million. And once I brought it to one of my business partners, after about 3 weeks of underwriting this thing myself and negotiating the PSA, realized that there was an error in my underwriting sheet that, I mean, cut $1 million. So once we fixed the error, I had to renegotiate $1 million off the price. And that obviously wasn't going to fly. So that would have saved a month of my life if I would have gone to a partner earlier to verify my math. So that is what I would say with any deal now. That's something we do all the time.
You got to check those formulas in Excel. Sometimes they, you know, even if you have it connected to the wrong, you know, cell, maybe one calculation is off, it can completely throw everything else off. So I feel you, brother. That's happened to me, you know, creating an Excel and then realizing, oh shit, I did that wrong. All right, that leads us to the last question. This is for the listeners. I'm sure people want to reach out, get in contact with you, learn a little bit more about Red Sea Capital Group. So what is the best way for them to do that?
Well, first, Gabe, really appreciate you having me on here. I've really enjoyed the conversation, and it's very brief to the point, and I'm a busy guy, so I really appreciate that. People can find out more about us at redseacapitalgroup.com. They can check out our podcast, which is From Trial to Triumph. And we're all on over social media, Instagram, LinkedIn, Facebook.
Sweet. I'll put those links in the show notes. So if y'all want to reach out to Caleb, just click the little more in the description. It'll pull down the full description, and there you can find Caleb's links. All right, man, that wraps it up. Thank you very much for hopping on the show.
I appreciate it. Thanks, guys.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe, the realestateinvestingclub.com. And if you guys want to support the show, all we ask is give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.